Maybe I should start by saying this. Don't listen to anybody that's selling you something. Um, Investment clubs, buy my penny stock, my whatever crypto that I'm pumping. I get these DMs and emails all the time. Hey, help us promote this new crypto. You can make a lot of money and blah. There's 20,000 of those things out there, and 19,998 of them are probably shit, maybe even more. Anyway, so let's get into some of the notes that I've got over here, because I got a full page I want to rip through. They're in no particular order. Some of these are things that you want to do. Other things are just ideas and notions that you want to stay away from, which I apply for the most part to what I'm doing with my investing. I haven't made a vast fortune investing money. I think I've probably made a lot more money running businesses and in crypto. And there's a few investments that I've made some good money off of. But generally speaking, I think where most people's heads go is, what stocks do I avoid? Which ones do I pick? How do I invest? How much to invest? Time frames. So I wanted to sort of like put all these notes together to sort of identify what I thought would be the most useful information in getting your head squared away around this sort of stuff. So first note I have here is knowing your time horizon. If you're 75, your investment strategies will be different than if you're 25. You got a lot more runway ahead of you when you're a young man. Okay. Knowing your time horizon is going to, it should, not everybody does, but it should play a significant role in how you invest money, what you invest in, how you invest in it, and the level of risk that you're willing to take. And because the market's generally going up over time, it's not a straight line. It's doing this as it's going up. Sometimes it's doing shit like this, but it goes sideways, and there's things that are not predictable. Nobody could have predicted, well, with the exception of a handful of people that were obvious insiders in hindsight that we know about, but nobody could have predicted the scamdemic of 2019 that they pulled on us. So there's certain things that will fall in your way, but knowing your time horizon will play a role. You can take riskier bets when you're younger. You're going to take higher yield bets when you're younger. There's a reason why old people mostly don't touch crypto, because it's a longer term time horizon. 1 and 2, they don't really understand it. So there's lots of things to contemplate when it comes to your time horizon. But generally, I think some good advice, some generally good advice is take bigger bets when you're younger. You can screw up and in 2 years be back exactly where you were. In 10 years, the sky's the limit, essentially for time horizons. But whenever somebody's talking to me about things like, oh, Bitcoin, and I just don't see it, it's just too volatile, Rich. It's like, well, if you're in and out, if you're an in and out sort of person, or you watch it do this in circles and up and down, especially over the last year, it's been all over the place. It's going to look scary. But my take is, if you're not going to hold it for 4, 5 to 10 years, what's the point in touching stuff like that? So again, if you've got the time, invest in something that's longer term plays. So there's that. There's a hell of a lot more than just stocks and bonds. Everybody always goes right to stocks and bonds. What's a good stock? What's a good bond? Do I put this percentage into that? And the other thing, look, between the stock market, which, let's be honest, has got some play in it, some slippage. It's got some interference, if you will, with certain powers that be. There's things that are a little more resilient to that. Bitcoin, for example, you can't really control it. It's going to do what it's going to do as long as people participate in that economy. Real estate, there's that. There's cars. You guys know that I'm a big car fan. If you followed me for a while through my Entrepreneurs and Cars channel, I watched a video the other day, Doug DeMuro, Captain Quirks and Features, one of my favorite channels to watch still. And he was going through the DuPont registry that they pumped out 2008 and 9 during the last major financial crisis. And they were taking a look at what certain low production, desirable exotic cars were selling for, just over a decade ago. And some examples that sort of pop out in my mind. There was GT40, Ford GT40, 2004, 2005 model. Could have bought it for 108,000. You can't buy a nice one now for less than $500,000 USD. There was Carrera GTs that were for sale in 2008, 2009. A few $100,000. You can't buy one for less than a couple million now. So look beyond just stocks and bonds. And it doesn't have to be, a $300,000 Carrera GT that, is worth over $1 million now. You can find certain plays and bargains in low production, high desirability, cheaper type of cars, even motorcycles, if you will. There's a certain motorcycle that I have my eye on. I'm not going to mention which one it is because I don't want to express too much interest, but there's a certain motorcycle that I have my eye on that I think will be valuable, and I have a connection to it. So there's certain things that you can invest in that will go up in value over time. Watches too. Some people love watches. I'm not a big watch person. I've got some nice watches. It's funny, like all the nice watches I have, were gifted to me. I never really bought watches, but I'm just not a watch person. I like cars and motorcycles, boats, planes, stuff like that. So you don't have to invest just in the stock market. So diversify your ability to play in certain areas. There's some people I know that play specifically just with high value watches. Watches can make you a lot of money. So look for other opportunities other than just stocks and bonds is basically what I'm saying with that point. If you're going to be dealing with stocks, look, I've played with the penny stocks, and one of my other notes is avoid penny stocks. I know that there's a significant amount of attraction to penny stocks. I've never made money in them. In fact, they've almost always gone bankrupt on me. Their value has either been eroded, erased, they screwed up, they never went anywhere. Of course, every stock probably started out with a low market value, not always a penny stock. I mean, there's some IPOs that come out, initial public offerings, where they're not pennies. Obviously, they're in the dollar or multiple dollar ranges, or even higher than that. But penny stocks do get pushed a lot, because if you buy something for 2 cents and it goes to 6 cents, oh wow, I've just tripled my money. It's so easy for something to move from 2 cents to 6 cents. Seems attractive, but the reality of it is that it rarely happens. There's always guys out there that have programs to sell in the penny stock area, and I don't pay a lot of attention to them on one hand, but on the other hand, the attention that I have paid to them, I haven't seen anything along the lines of, okay, here's an actual screenshot of me buying this penny stock for 2 cents with a transaction, on your whatever trading account officially, and here's me selling it later on for this amount. I just haven't seen those. I'm sure there's people that have made some money off it, but it's very, very high risk. So if you're going to be dealing with stuff like that, you better know what you're dealing with. And you probably want to figure that out early on in your life in your 20s, because you're probably going to lose a lot of that money. So back to the statement of large cap, a company that has a market capitalization of around $5 to $10 billion is usually not going to go anywhere unless it's run by a complete bunch of morons in an industry that's dying. Large cap businesses that aren't going to go anywhere that I've invested in. There's a company that, what is it called? Otomix or Atomics? I can't remember how to pronounce it, but there was a parent company that owned Pratt and Whitney and an elevator company. Large growth opportunities that come out of military conflict, out of building the economy. Because when you build skyscrapers, you need elevators and all of these things. So contracts come out for them, and they need maintenance as you build more and more of these. So if you're in an economy that's growing, where they're building a ton of skyscrapers, there's probably lots of opportunities to look for raw material suppliers, people that build elevators, that maintain elevators, things like that. Large cap companies out there that exist, that pay nice dividends, that have been around for a while, that show steady growth over time, are good opportunities and generally safer. I'll put it that way. Now, I'm not getting into the weeds here with this sort of stuff. These are just some general ideas and some concepts that I've learned that I'm bringing you up to altitude on. If you want to learn about stuff like this, lots of good books on it. I'd say if you haven't read Economics in One Lesson, Henry Hazlitt, I think, is the author. Very simple, Very straightforward, covers multiple areas from things like minimum wage to economic conditions and everything like that. And it's not long. Very, very standardized sort of stuff is a good starting point. Ray Dalio, if you can find anything from Charlie Munger, even though he hates crypto and is a bit of a dipshit in that area, but he understands stock investing. Warren Buffett, of course. So guys that have a proven track record that are old, not just salt and pepper, but are like completely gray at this point, and the autumn years of their life, that have spent their entire lifetime investing, I think is probably a good place to get into the weeds for stuff like that. What other notes do I have here? Value stocks. So Charlie Munger's talked a lot about his strategy around value stocks, which are generally reflected in a low price to an earnings ratio. Trying to give you some examples of stuff that I've done in that. I think it's, let me just pull it up real quick on my other screen here. Joy of doing these things live. No, that's not it. I think it was X. They might have sold the company or restructured it, because that does happen. You know, an interesting piece of stat that I came across a few years ago, when they first started to put out these fortune lists of like the biggest companies with the largest market caps. It's been quite a few decades now. I think it's been well over 7 decades at least. The number of companies that still exist today from the original decade when they started putting out that list is very, very small. I think it's less than 12 or 13%. It's very low. Most companies either get acquired, they go to business, they merge. Some come off, you know, public ledgers, so they go private. But for the most part, they don't really last for very long. That's it. United Technologies is one that I wanted to pull up. UTX is the actual stock symbol. Companies like that in opportune markets, that company was a value stock. Let me pull up the chart here, UTX chart. Let's see if it goes back 20 years. That was a value stock just after 9/11. Just trying to, you know, pull it out of the UTX chart. Why isn't it coming up? So it's a conglomerate of a whole bunch of companies under it. Jet Engines, Pratt & Whitney, Otomix, or Atomics, or whatever it's pronounced, the elevator company. What is the UTX stock now? It's still not coming up. UTX, why isn't it coming up? Come on, work with me here, Google. Here we go. So if I go to the max, let's see if it goes back to 2002. Yeah. So around $30 is what I paid for it. And I think when I got out of it, it was around the $70 mark. Had a nice dividend yield. It was well diversified in a lot of industries. Aerospace, defense. Let's see the list of companies here. Subsidiaries. They even have subsidiaries built within it. $67 billion in revenue on an annual basis, 182,000 employees in an industry that's always going to need people and is always going to grow over time as the economy expands, which it does. It just, you know, like I said, the economy, everything's growing over time, right? So those are the sorts of large cap value stocks that you can do well and make quite a bit of money in. What's it at today? $103. Well, look, you know, the PE ratio is still reasonably strong with that too. It's actually not a bad one, and it's probably worth looking at. But anyway, we're going to keep moving on. Value stocks, talked about that. Oh, employer. A lot of people don't take advantage of this within companies. I know that when I used to deal with large corps when I was an employee back in my 20s, they still offer these today, but the employer matchups or top ups or whatever it is that you want to call them, where you can take a certain amount off your paycheck, and then the employer will match up to a certain percentage of that for free. It's free money. Why wouldn't you take advantage of that? If you're living paycheck to paycheck and things are exceptionally tight in your household, you haven't managed your money properly, or you've mismanaged it, or you've made some bad choices, or some bad luck has come your way, I can understand why you may want to avoid that. But why would you not take advantage of free money an employer is willing to put into your retirement or investment account, usually tax-free, if it's structured properly or complies with government guidelines, depending on where you live, for example. But these employer top-ups or match-ups, whatever you want to call them, you should be maxing out on them. When I was an employee at the time, I was surprised at how few of my colleagues would take advantage of the opportunity to get free money from your employer, which goes into a reasonable investment portfolio. And again, if you're younger, if you're in your 20s and you're only putting away a couple bucks, the employer tops up a couple bucks, per pay cycle, maybe 50, maybe 100, maybe a few hundred, I don't know. But if you put it in something that's got strong growth and you're in your 20s and you're at it for 5-6 years, you could end up with a nice starting point, and that follows you, wherever you go. You take it with you, right? Because it's in your name. It's not the company's money. The company is giving it to you as a benefit of being an employee with that company. So take full advantage of any employer matchups, top-ups. I really hope you guys enjoyed that clip. If you want to watch the full-length podcast, you can find that over here, that clip's from. If you're newer to the channel, make sure you hit subscribe over here, and pin down below in the top comment, you'll find a bunch of useful links to my website, my supplement line, books, and a bunch of other stuff. Have an amazing day. Peace out.